Tardes, ¿qué tal? Mi nombre es José Manuel Elizundia Álvarez, del Departamento de Innovación y Emprendedurismo de la Universidad Tecnológica de La Laguna de Durango. Y es un placer en esta ocasión el tener a un conferencista de la talla de José Quasar Elizundia Salcido, que nos va a hablar de una conferencia, una plática interesante acerca de el ahorro y la inversión. The savings and investments are concepts that all people, independently of his or her stage in life, shall understand in order to have a better living condition. Entonces son conceptos que cualquier persona debe de aprender independientemente de la edad o la etapa en su vida para, eh, para tener mejores estándares de vida. Ok, se me olvidó grabar esta parte. Quasar Elizundia es un analista de mercados para Pepperstone a lo largo de los años, habiendo trabajado en las mesas de investigación de IG Group y FXCM. Quasar ha adquirido una sólida experiencia en el mundo de las inversiones y el trading. Quasar tiene una licenciatura en negocios internacionales de la Ibero, Universidad Iberoamericana, una maestría en inversiones y mercados de capital del Instituto Europeo de Posgrado y una maestría en finanzas de la University of Dallas, y posee también la designación de CMT. Entonces, bueno, mi nombre es José Manuel Elizundia y del Departamento de Innovación y Emprendedurismo de la Universidad Tecnológica de La Laguna de Durango, y tengo el placer de presentar a José Quasar Elizundia Salcido, quien en este momento le cedo la palabra. Adelante, mi estimado.
¿Qué tal? Bueno, muchísimas gracias a todos por asistir a este evento. Muchísimas gracias, mi estimado José Manuel Elizundia. De verdad que estoy ampliamente emocionado de llevar a cabo esta presentación. Ahora sí que es un tema al cual, bueno, usualmente yo en mi carrera pues llevo a cabo muchas presentaciones, aunque estas están más un poco enfocadas al aspecto de trading como tal. Por consiguiente, pues ahora sí que me gustaría compartir esta información, la cual, como lo comentaba muy bien mi querido José Manuel, pues es de suma importancia. Considero que son conceptos los cuales benefician a toda persona, independientemente de su etapa en la vida, y el manejarlos adecuadamente pues pueden ayudar bastante en la vida. Voy a proceder, bueno, ahí te pregunto rápidamente, José Manuel, si ya comparto mi pantalla.
Sí, ya puedes compartir la pantalla.
Now I'm gonna transition now to English. I was told that it will be better for you guys to have this type of content in English. I gotta, of course, extend the apology to the Universidad Tecnológica de Laguna de Durango, because I actually initially elaborated the whole presentation in Spanish, but I think it will be great because that way you guys can get to practice, that bilingual kind of perspective. As my dear Jose Manuel mentioned, this is going to be a webinar, a conference about financial education. My name is Quasar Elizundia. I'll give you a little bit of background of myself before I get into the nitty-gritty of the whole content of the whole savings and investments. As he mentioned, I did my, to begin with, I was born and raised in Gómez Palacio, Durango. I love La Laguna. It's my hometown, and therefore it's a pleasure to be with you all. In terms of my educational and working background, let's just go back to my college degree. Back in 2010, I was doing my degree in international business. Back then, that's when I started doing the whole kind of like trading and investments. I was starting to like dip my toes into the whole realm of investments, which it's a never-ending progress. You always learn. It's a beautiful career, in all honesty. So while I was already back in my college degree, I kind of like had in mind that I wanted to work for a financial brokerage firm in the United States. So I envisioned it back then that the best plan or course plan for doing that will be to enroll in a university in the United States. So I started working in the whole side of my secondary language or English. And while I was planning on that, I that's when I did the other master's program, which was more oriented towards investments and capital markets from University of Spain, el Instituto Europeo de Posgrados. Even actually before finishing that program, that's when I moved to the United States, initially to Dallas. Back in 2015, that's when I started my master's program, as he mentioned it, in finance. And while I was in that program, I actually had the opportunity. I saw this opportunity at one of the biggest, or at that point, the biggest retail broker for currencies in the United States, FXCM, that had this internship opportunity. So I happened to actually be already trading with that broker. So I was so surprised that they actually, had that opportunity, that I was able to get it. And then from there on, I have been working for the biggest retail brokers in the industry for trading. After working with FXCM, I then moved to IG, which was, or is, it still is, the biggest CFDs, contracts for difference, which is just a different type of a derivative instrument in order for you to trade different markets, the biggest in Europe. It was not until last year when this Australian broker, Pepperstone, the one that I'm actually representing today, contacted me. They wanted to push the Latin American market, and that's what they got in contact with me. So I decided to take on this new initiative, which was in some sort of way in line with what I was already doing. With FXCM was primarily focused towards the English market. With IG, I was already doing Spanish things, and now with Pepperstone, I'm totally focused on the Latin American market. After that, I proceeded to do another or a designation, the CMT, which is more, it's still markets trading, more oriented towards the technical side of things, oversold, overbought, price action, all those things, which I'm not going to bother to get into all those things. I personally don't know your background, your knowledge of finance, so I'll keep it very simple, but covering all the primary parts, which I think that are extremely important for you guys to know. Now, I'll briefly cover the content. It's just primarily 4 points. What's finance, types of finance, savings, and investments. Probably you or none of you have had the chance to assist one of the events that I do on a regular basis with Pepperstone, but I love to keep things quite simple, and I think the best way to start that is just with a primary question, or with a basic question. And that one will be, what's finance, right? Well, it's a term that that describes activities that are associated with savings, the bank, or banking, the banking system, debt issuing, credit markets, and capital markets, money, and investments. Now, I'll actually, before I keep on going on this, I'll love to, if possible, after I finish, would like to hear your comments, or if you have any questions regarding what I have presented. And if you guys think that I'm talking too fast, please let me know so I can tune down a little bit my speed, because sometimes I do tend to get a little bit of myself. Anyhow, again, we take the perspective of what's finance. Well, we can, from a more simpler perspective, will basically finance represent money management, right? These also take into account supervision, money creation, and the study of money, as I mentioned before, the banking system, the creation of credit, investments, and the passives and actives that compose the financial system. It's pretty simple. What kinds of finance there exist? Well, primarily there's 4 different kinds, and later on we'll just focus on one. But I just wanted to touch briefly on this side of things, because even though they have common factors, they all in certain ways specialize in different things. So the first one will be personal finance, then secondly, family finance, corporate finance, and lastly, the national finance. What do they all have in common? Well, basically, money management. As we'll see a little bit ahead, well, whenever we talk about personal finance, we most likely are going to take into consideration our income, like whatever capital we're receiving for our working activities, and then most likely, spending in certain either fixed expenses or variable expenses. When we talk about the family finances, it's going to be one that it's most likely not going to be oriented towards being profitable, but instead of just maintaining, covering the usual fixed expenses, which in this case is either going to be your rent, your mortgage, paying all the different services or bills that the house has. Most of the times, families aren't really oriented in the whole being profitable, as I mentioned. When we talk about corporate finance, well, they're going to be heavily focused on debt, acquiring debt, and financing projects in order to be profitable. Another area that they'll be heavily focused is on being cost effective. The whole area of production, what costs come with the production. At a national level, we have a different kind of focus at this stage. Well, it's primarily going to be about the national balance sheet, the issuance of debt in order to support different projects at a national level in order to keep the economic growth going, having, as I mentioned, interest rates control or controlling the interest rates in order to manipulate other areas, whereas it's economic growth or inflation. So having covered all that, as I mentioned before, going at a very simplistic level, this presentation in this webinar, we're going to be focusing on personal finances. Now, as you probably guessed from the previous slides, well, we are going to be covering two sides to this thing. First, we got to take into consideration savings, because there's not going to be a capacity to take investments, unless that you have a very specific case where you were giving some fund, or your family happened to give you some sort of money, then you happen to have some sort of rich, or not rich, capital. Let's just put it on capital, and then you can go on to take finances. But those aren't going to be like your usual case. So therefore, we're going to be covering initially the saving side of things. Now, one of the primary things whenever we get to analyze the whole situation of saving is that we have to have a budget. Why a budget? Because if we don't have a budget, most likely we're not going to have control over income and our expenses. And a budget, most of the times, that's what it's going to be, right? You are going to be categorizing all of your incomes, whatever way they're coming to your budget, or your expenses. How is it that you spend your money, right? How can these be done? I'm not gonna exactly tell you, but it's a primary. It's very important that you guys keep some sort of budget and that you record all of your expenses, because if, as I mentioned, you don't get to do it, there's most likely not going to be a way that you can end up saving. You're not going to have an idea how much you're saving, and therefore it's going to be harder to allocate once that you have that money saved into future investments. As just very simplistic example you have on this slide, you can just set up a column where it says the type of category, if it's an income or let's just put it as income or an expense. What kind of concept is it? Oh, well, I work for this. It's my payment, or I don't know. You label it as you want, and then on the third column you can establish the amount of that type of a transaction. Let's just put it that way. Now, what's gonna be? There's just basically gonna be two situations. Either your budget, on your budget you have higher income that your expenses, and that's gonna allow you to have extra capital that is going to be your savings, and then therefore you can put it to invest or put it on investments. Or the other one, which is not going to be the favorable one, which is going to be your expenses are higher than your income. That's not going to be good. That's why we're kind of budgeting in order to prevent this thing. Now, if we happen to be in that situation where our expenses are higher than our income, and in the worst case scenario where we actually utilize debt, what's going to be the next step for you to do? Basically, having analyzed or having established your budget, how your expenses is, or how were your expenses and how was your income for this certain month. If you have debt, this is what it's gonna happen, or what should happen in order to keep a healthy financial life. Let's just put it that way. Basically, you first of all have to establish all your fixed income, those type of expenses that you cannot avoid. Like you're gonna either have rent, you'll have to pay your bills, all those expenses that are related to your daily life, right? There's no way you can avoid them at all. So you'll have to set up all those. And after you have covered all of those, the money that is left after that, then you have to use that in order to pay that debt. Why is that the case? Because in most of the cases, what's going to happen, debt is going to be associated with a minus percentage. Let's just put it that way. And if you have debt that an annual rate has a 30% and you're not paying that debt, but you're trying to invest in that asset where you're investing is just giving you a 10% return, annual return, you're still going to be underwater. Why? Because you are receiving 10 positive, but you are having 20% negative on your debt burden. So that's going to let you on a negative 10%, right? Now that takes us to the next level, which is going to be in terms of debt for consumption, debt shouldn't be utilized. Let's just put it like that. Why? Because as I mentioned before, it's not gonna have a positive. The only case scenario where we want to carry on debt is if it's gonna be destined for a productive purpose that actually is gonna be generating more money. And in that case, one of the things that you have to always you're going to have to take into consideration is that if you're acquiring debt at a 20%, at least your minimal return on that investment for that level of debt that you are taking should be something above that, because otherwise you're going to end it up in negative terms, and that's something that you want to avoid. So that's a general rule. If you're just using it for a new phone or something that is not going to be realistically productive, generating more capital, avoid it. If you can afford it, you shouldn't be buying it. And yeah, use acquire debt when it's for productive purposes. So that's going to take us to the next section, which is with in regards to your budget. An easy way, which is not the ideal, we'll see the one on the next slide, is just going to be to establish your fixed expenses. From there, you'll save money. And then after you have saved, then you can take on variable expenses. What are those? Well, if you want to go to the movies, or if you want to go to a bar with your friends, all of the other things that are more related to enjoying type of things, that's when you can get to take on those sort of activities, once that you have cover your responsibilities per se. The ideal is going to be from whatever income you get, you save 10%, and then you proceed on taking your allocating that extra money for fixed expenses, and then from there your variable expenses, which I don't know what's gonna be for each individual person, but that's kind of like the way that it should be. In terms to, once again, to have a better financial life. Having covered all this, if you now have money, you have saved, you can adventure on the next part of things, right? Which are going to be investments. Now, on this side of things, there's going to be, I have put on display a CISO, un sub y baja. Why? Because it's a perfect representation of how things work in the financial work. When we get to talk about investments, there's just going to be two parts to this. Whatever asset you're taking into consideration, there's going to be primarily two parts where you have to focus. What's the risk of this asset? And based on that risk, I should be paid this certain amount of return. So therefore, what do we have? The higher the risk an asset has, or an investment tool has, you should be retributed at that level. The lower the risk is, you should be paid at a level at a lower rate. I'm sorry. Why is that? And in some sort of way, it aligns with what usually is on live, those type of jobs. But yeah, maybe not most of the times, but in generally speaking, the more risky a job is, well, the higher you should be paid, because you're being paid based on the risk that that activity represents, right? Now, having covered all of this, now that we understand the principles behind uh, investments, there's more to it, of course, but as I mentioned at the beginning of the presentation, I'm keeping things very simplistically, so you guys can get to have an idea of how it works, and therefore, try to start putting it on practice. So, now that we know the principles behind investments, we go on to what kinds of assets we can invest in, and we live definitely in a very different world than it was 40 or 30 years ago, when most of the times, if you wanted to invest, it was very, very complicated. Very few people had access to investing in any other areas of the world or in more complex type of financial instruments. Back in the day, you were lucky if you had the opportunity to invest in the stocks of your country, or maybe in some debt issuance by your country. Nowadays, it's very simple. It's very easy. It's accessible to everybody that has saved money and has that extra capacity, financial capacity to take on this. Now, I actually wanted to give you a perspective. The broker that I work for, basically, as I mentioned before, you were lucky if you had the opportunity to invest in the stocks from your country or the bonds from your country. Nowadays, it's very, very easy to get access to all of this. For example, with us, you can get to have access to all the different currencies of the world. Basically, pretty much, you can get access to all the different metals, like commodities, metals, energy commodities like oil, natural gas, gasoline, indexes. If you were to try to invest in, I don't know, in stocks or index from South Africa 40 years ago, it most likely was a very, very difficult task. Nowadays, you can either go to invest on the S&P 500, the most known index in the world, or you can invest on the 50 most popular stocks from Europe, or in the Hong Kong index. If you want to invest in copper, commodities like cotton, like nowadays you have access to all of this. There's even like a little bit more complex instruments like ETFs. Basically, what it is, it's a fund that it's quoted on the stock market, and these have like thematics. If you're interested in just buying stocks that are related to, I don't know, the industrial sector or just the energy sector, or if you wanna that are related to timber, I'm sorry, like all these different areas of the world, you can get to have access. It's a very different world from what it was before. But having said that, let's just go back to the principles of life, or the most basic type of instruments. And in here, we're gonna just, for those that are beginners, let's just focus on stocks and bonds. Now, for you that actually don't even know what a stock is basically an ownership of a company. You own a percentage of that company, whereas a bond, it's a contract where you lend money or you give money to. Actually, companies have bonds as well, but most of the times it's for governments. Most of the bonds are related to governments, and basically it's a contract. Why is it that bonds are generally less risky than stocks? It's primarily because of the accounting practices, where from the balance sheet, on the right side, you're for sure, or most of the times will have your passive, and then left side you're gonna have your assets, right? So debt has primary access to the assets or the capital of the company. That's why, therefore, bonds carry on less risk. As a rule of thumb, most of the times, and what it's suggested for people that aren't really going to be taking a very active role in investment, is going to be the age rule, right? Which basically tells us that, considering your age, you should allocate that part into less risky assets. In this case, just taking into consideration those that are more simple, 20% in bonds. If you're 20 years old, you will allocate 20% in bonds and the remaining 80% in stocks. If you are, just say, a little bit older, you are 40 years old, then what happens? Then you take on a more or a less risky approach to your investments, where in this case, 40% of your capital that you have destined, or you're going to destine to investments, it's going to be on bonds. The remaining 60%, it's going to be in stock. Why is that? Well, basically, the rationality behind this is that the younger you are, the more time you have to recover from any bad decisions, right? And also that, let's just put it that way, that we have more time to recover, and also that you have less capital that it's being invested. Let's say that you make a bad decision when you're 20 years old and that you buy a stock that wasn't really that didn't have that much future. Well, with a couple of more years, you can get to recover from that mistake. Whereas if you, let's say that you're 70 years old, you are not going to be able to get back to work. So therefore, you have to allocate most of your assets into things that are very sure that are going to help you retire. Having covered that rule, and of course I'll take your questions if something is not as clear, if you have a different perspective, I would like to cover this real quick, which is compounding interest. And you probably know this guy. He has a very famous phrase around it, which is compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. Albert Einstein. Why is it? We're going to go on over this very simple model that I put for this presentation, in which I show the difference between simple and compound interest. As you can see on the first section, we have a structure that pays interest over interest, or yeah, basically that's what compounding interest is. That whatever interest is generated over capital, you will still get interest over that. So as you can see, whereas simple, let me take a step back. If we get to cover interest, simple interest, we're just gonna get interest over the principal or the initial investment, and that's it, and that's what accumulates.
Sorry,
It doesn't.
the is quite small. We cannot see the numbers.
That better?
Yeah, that's better.
So as we can see, we can one, if we were to invest this over 25 years, one's going to take us to $108,000, whereas the simple one is just going to be 35. That's why it's very, very important to start investing from an early age and investing in things that are compounding or that pay interest over this interest. So let's say that we start with 10,000 pesos. Let's bring it to pesos, right? And we, on a yearly, we have the capacity to save 10,000 pesos every year. If we were to do it, or we were to invest this amount, saving 10,000 pesos a year, investing with an initial investment of 10,000 with a portfolio that gives us 10% return, well, over 25 years, that's going to take us to over $1 million pesos. So there you go. If you start at 20 years old, most likely you're going to end up being a millionaire. However, what's the catch on that? That these things take time, need patience, and a lot of people just I want to be rich tomorrow. They don't have the discipline. They don't have the structure to be patient and to do the right things. If you do the right things from an early age, it's gonna pay off, and we can get to see the difference right here underneath. If we were to invest on something that is just fixed, with fixed interest, I'm sorry, it's just gonna be 35 extra thousand pesos. So it's extremely important that you guys invest in something that that compounds. And well, that basically will be all from my side. I don't know, it's a very brief, I think it's a very concise presentation. Please, if you guys have any questions, if you want to extend them to me right now, I will be happy to help you with them. If not, you have on the screen my contact information, my mail, and my Twitter. I don't know if we have left some time for questions.
What will you prefer to invest on, stocks or ETFs?
Let's go over. It all depends. If let's just say that you are not gonna be very active, that you're not gonna be considering what's the market dynamic, then I will go for an index. I'll just go for the S&P 500, right? That way I know that I'll have a perfect diversification of stocks for a country. If you're going to be having a more sort of active, that you're going to be knowing what's happening with the markets, then probably I will adventure to go on ETFs. Let's just say with the whole pandemic. All right, now the whole thing has been, well, which were the stocks that were benefiting the most from company or from people staying home? Well, the Netflix, the Apple, all of those that were related to content creation, right? So maybe you could have got into an ETF that covered that area of the market that it's more exposed to what you think it's good. For example, houses in the United States have their prices have skyrocketed. If you had known that that was what the pandemic was going to do, that having more people staying at home was going to make a need for people to buy bigger houses, you probably will want to take in an ETF of house where it is um one that it's I'm just not gonna go over looking for it, that it's related to real estate or houses. I forgot where it is. Home builders. Here it is. You probably would have looked for that one. So it all depends. If you're not gonna be that active, probably something more generic. If you're gonna be taking your time to study what's happening, what's the market's dynamic. If you think, for example, that over the next couple of years, interest rates, that the economy is gonna fully recover and that the federal banks around the world are gonna be raising interest rates, maybe you want to buy an ETF that buys bonds, right? Because those are going to be going higher in order to, no, they're going to, I'm sorry, you will want to sell it because those are going to deep down in order to represent higher levels of interest rates. You got to remember that with bonds, it's an inverse relationship. The higher the price of the bond, the lower the yield that they give. I hope that answered your question.
For example, that you mentioned Netflix and other and other stocks that increase, other companies that increase their stocks during the pandemic. Do you have a figure how much was the increase? How big was the increase of Zoom, one of the communications tools?
I don't have it as of right now, but we can for sure take a look at it. Just bear with me a moment. Now, I think that's not an ideal practice to just focus on the return, because once again we bring up the whole other side of things, right? Which is the risk. So from the pandemic, to its peak, it grew 900%. It's massive, right? But
Not too bad. Not too bad.
not too bad, one will say. However, what if you actually, how did you know to buy it right on January? How did you know how long it was going to stay? And what if you happened to actually bought it towards, let's just say, September? 1 second. Here we go. You, as of right now, will be down around 5%. So that's why you have to be a little bit more advanced if you want to take on that more active. How will you know when to buy, when to sell, especially with this stock that has just been around for 2 years, since when was its IPO? April 2019, a little bit over 2 years. There's not that much information that tells you where it's fair value, and especially if you bring into a consideration a total change in the world dynamics, it makes it a little bit more complicated, right? What else you have?
Could you repeat again how much will be the increase if you save 10,000 pesos each year and having a compound interest? How much will be the at the end of, well, mentioned 25 years? What will be the
1
amount of
million.
money that you will have?
1,091,000 pesos.
1 million, saving just 10,000 per year.
If you start today with 10,000 pesos and each year you save 10,000 pesos, and if you invest it in a fund that on average gives you 10% a year, which, just to give you a realistic, if you put it on the S&P 500, which is a developed index, or a stock index from a developed country, on average it has been giving a year 8%. So let's just take as a reference, right? So, well, here, because it's a little bit lower interest than 10%, well, it's 800,000 pesos. But if you were to have one of 10%, you will probably have to take on more risk, right? We go back to the whole, if you acquire a little bit more risk, which if you're starting to do it at 20 years old, you for sure can do it. You should do it, as a matter of fact. This is, if you want to take risks, I'll be like going for it right now. If, for example, Mr. Elizundia here wants me to take on higher risk, I'll be, well, how old are you? You know what? It's not worth it, because you probably need money to retire. You know what I'm saying? So it all depends. And if you're young right now, for sure, go for it. Like, definitely go for it. And this is what the figure will be: 10,000, saving 10,000, or starting with 10,000 and saving 10,000 with an interest rate of 10%. What else?
Could you describe your investment profile?
Oh, so right now I have. I'll share with you guys a little bit of what I do. So on one side I have a portfolio which focus on value investing. What is that? That basically it buys, or I have bought stocks that I consider that are great companies and that are a very good value, or a very good price, therefore giving a great value. On the other side, I have recently, over the last year or so, I've got myself more into algorithmic trading. So there's two sides to myself. So one, I'll do more value investing with bigger amounts of capital, and smaller amounts of capital destined for algorithmic trading. What is that? Basically taking a more technical approach to things. So basically this strategy that I've been working on, it's going to tell me, I'll look for currency pairs, or FX pairs that haven't really been moving too much, that are in a process what it's known as consolidation, and I'll have an algorithm that will buy them. What's an algorithm? A code, a program that will buy them whenever they go above their 2 standard deviations over the last 400 candles. So there's those two sides to myself.
For the audience, what are the candles?
So right now, what a candle is going to be, these are what they're known as Japanese candles, right? Candlesticks. So each one of these things that you see right here, it's going to represent a period of time. Or in this chart, I have a 15-minute candle. Basically, what this is telling me, over the last 15 minutes, the high of, actually, let me just show it to you right here. The high price of this was 0.7250. The low was 0.7249. You guys will see it on this section. So basically, it's just going to be telling me over this period of time where the low, the high, the opening, and the close price is. So that's what a candle is. It's just going to give you a representation of price. There's different type of charts. Of course, you have the most common that you will see most of the times, which is a line. It's just going to take into consideration the close price. So let's just bring a pair that it's more common. The euro against or what else better for this? The peso, the Mexican, the mighty peso. All right, so this is going to tell you over the last 15 minutes, the peso is going to close on 19.92. So that's what a candle is. If we were to bring, I'm sorry, that's what this line chart is. If we were to bring a candle, this is going to tell me over the last 15 minutes, the peso against the dollar opened at 19.92 with a high of 19.9258 with a low of 19.9246, and it's closing at 19.9263. What else?
Could you describe what are the main factors that are affecting positively the Mexican peso to have the actual value of 19.8, something like that, or below 20 against the dollar? What are the political or macroeconomic things that are affecting positively, or whatever you could describe to the Mexican peso?
So whenever you get to talk about currencies, you're going to be primarily focusing on interest rates and the risk of investing in that country. What you guys see right here is the pandemic. The pandemic kicked, right? What happened to the mentality of investors? I don't want to do anything with anything that it's related to risk. Of course, when we take into consideration the economy of the United States against the economy of Mexico, well, Mexican economy represents a little bit more of a risk, right? If you were to invest in Mexico, it carries on a higher level of risk. So people, or let's just call them investors, got rid of their risky assets, and that's what they flew into more safe haven assets or safer assets, right? So that's why it got to go all the way to 25. Things started normalizing, kind of like the investor mentality got to be like, all right, it's not as much risk. We are not carrying as much risk. So it got back to the whole dynamic of, well, what are the interest rate levels in the United States and what are the interest rate levels in Mexico? Of course, in Mexico, you have higher levels of interest rates, but at the same time, you have higher levels of inflation. So that it's another factor that you have to bring into consideration. And the other part will be, of course, the risks, the mentality of the investors.
Las remesas, the famous remesas that is the name that we call the money that is sent from the from Mexicans that are working abroad or working in the States and sending to their family here in Mexico.
That helps the peso. Because you got to think about this. So if there's going to be, because it actually is a significant amount of money that it's being sent from the United States to Mexico. We go to the principle, actually everything, supply and demand. If they have dollars and all of these dollars are going to be buying pesos, what is that going to do? People will want pesos, right? If they need to send the money to Mexico, they're going to be needing to buy pesos. If there's that much demand, that should increase the value of the peso or push the pair, this USMXN, to the downside. But that's just one side of things. Remesas and the whole dynamic of Mexican people from or living in the US sending money to the Mexicans, it's not the only factor that plays into this. As I said, there's financial risks, there's interest rate levels, there's economic political factors, there's a bunch of other factors that play into what the value of a currency is.
One of the hardest topics in currencies or in investment are the cryptocurrencies also. What are the main pros and disadvantages of this type of investment or currencies?
Well, here's the situation. The main risk is going to be governments, right? Because what a cryptocurrency is nothing else but a currency that it's a decentralized currency that is not issued by a government. What does that gives holders of these cryptocurrencies? The possibility to avoid current financial systems. And of course, let's just say as the US government, having the dollar, having all these controls over it, you have control over what it's done with, the money. If people put money into cryptos and the US government doesn't have, or the Mexican government or the European government doesn't have access to, or any sort of way to control it, it takes away the power, because there's a lot of power behind owning a currency, and especially if you're the reserve currency of the entire world, which is the United States. So that's why the US dollar is very powerful, because the United States government can control to put either sanctions or control its value, which not necessarily control its value. They can get to do it, but they don't go into the manipulation of it. But yeah, that's where I will put the main risk. Where things are heading for sure is the ledger technology, the technology behind cryptos, I think. And there's already a lot of programs from central banks around the world transitioning to digital currencies, but just, digital dollar, digital euro, digital renminbi from China.
What do you think about the recent announcement of the Salvador government that he will adopt as an official currency in perhaps one or
legal tender?
Legal tender. What do you think about that announcement?
I mean, in some sort of way, it gives validity to the current cryptocurrency system. But when we get to, until you don't have a European Union, until you don't have a United States actually adopting any of these currencies as legal tenders, with all due respect for the people from El Salvador, I mean, what El Salvador does is not going to affect at all the big financial system. So it's positive, but it's not what you will need in order for them to take the next leap.
What is the position of the Chinese government regarding to the Bitcoin, and what
they have banned mining it? So, and they don't accept it. They don't take it as legal tender or as a legal currency. They don't like it. Why? Because they know what the other governments, and here's me speculating. This is not representing Pepperstone. This is not like, they know what the other governments know, that it takes away power from them, so they don't want, especially China. China is it's a communist party, so they want control over everything. So what else?
Bueno, creo que I think that we are approaching to the end of this of the time that we have scheduled for this conference.
O si hay una en español, alguien que no se haya animado, también a preguntar, no hay que segregar.
Pepperstone en particular tiene así como un ETF para las cryptocurrencies, o sea, creo que por ahí.
Sí hay. Mira, déjate lo muestro rápidamente. ¿Dónde estamos?
Y o sea, creo que tiene diferentes instrumentos de inversión y que comprenden.
Obviamente tienes acceso a Bitcoin Cash, a Dash, a prácticamente todos los principales, y a índices de criptomonedas, de las 10 principales criptomonedas, las 20 principales criptomonedas, las 30 principales criptomonedas, obviamente en base a su valor de mercado, ¿no?
Mencionaban por ahí 100 criptomonedas, algo así.
No, 100 ETFs.
100 ETF, ya, pero digamos, ¿cuántas serían las criptomonedas que manejan como
pues
índice?
Tenemos todas las principales criptomonedas y obviamente también los índices de criptomonedas. Si no te quieres exponer únicamente a Bitcoin, vamos a retomar. Si no quieres nada más estar en Bitcoin y quieres Ethereum y quieres Ripple y quieres Litecoin y todo Dash, pues compras el Bitcoin 10. O si quieres todavía las que son de un poco de menor valor, compras el Crypto 20, Crypto 30.
Muy bien. Bueno, pues respetando el tiempo del conferencista y lo que nos habíamos programado, pues es tiempo de agradecer enormemente el esfuerzo de José Quasar Elizundia CMT Y bueno, pues la Universidad Tecnológica de la Laguna de Durango se complace en haber hecho realidad esta presentación. El Departamento de Innovación y Emprendedurismo pues también participó de manera activa en la realización de este evento. Entonces agradecemos enormemente el apoyo que nos ha dado José Quasar Elizundia para la realización de este evento, de esta conferencia, de esta plática, en donde a veces hay términos que no son fácilmente comprensibles, cuál es el ahorro, la diferencia entre el ahorro, la inversión y por cuál es la importancia de estos elementos en la vida de las personas. Entonces, bueno, mi estimado José Quasar, algo con lo que te quieras despedir de la audiencia.
No, pues ahora sí que extender las gracias a la Universidad Tecnológica de La Laguna Durango por la oportunidad y obviamente para los participantes pues empiecen a ahorrar, a invertir y de verdad que si lo hacen de manera adecuada desde una pronta edad pues va a tener sus beneficios, ¿verdad? No es algo a lo cual pues tienes que dejar ya al último, ya cuando tengas 40, 50 años, ¿no? Lo puedes hacer desde manera temprana, obviamente pues siguiendo ahí los pasos mencionados, los cuales pues sí se los presenté de manera bastante sencilla, pero pues son los principios, ¿no?
Muy bien, bueno, pues entonces no nos queda más que agradecerte nuevamente y hasta la vista. Estamos en contacto. Hasta
Hasta
luego.
luego, nos vemos.